Equities in general have done well. Do you think for next 2 or 3 years, equity as an asset class has a long way to go?
No, and I think in the case of Asian equities, it's got an extended period of outperformance. So I think it's way too early to sell all your Asian emerging market equities.
What makes you bullish on Asian equities? Because for China, there are concerns about debt. Japan is still growing below its mean line. And for India, the earnings recovery is still not real.
Well, I've been structurally very overweight India, as you said in the intro, for several years. I've been basically 3 times overweight India in my relative return portfolio since before Mr. Modi was elected. So I retain that structurally overweight, 3 times overweight. And in my long-only Asia ex-Japan portfolio, I actually have more than 50% in Indian equities. And that portfolio is up a lot this year. So my Indian view basically remains the same. Where my view has changed significantly in the last 12 to 18 months is that I've been running in the last 18 months a bigger overweight in China in an Asian context than I ever have, and I remain overweight China. So that what's improved dramatically in the last 18 months is the China macro story, and China equities are the big outperformers in Asian emerging markets this year. In fact, when I last looked, the only Asian market that was outperforming the benchmark this year was China. So this is the big change in Asian equity performance, and this has been a big pressure on many global emerging market investors, because many global emerging market investors began the year underweight China, and in particular underweight China banks. And so there's been a pain trade as they're being forced to buy back China equities. So to me, it's the China story that's the key change this year. And the reason, and China equities still look cheap, they're extremely cheap relative to Indian equities. So I have a barbell strategy. I have both India and China in my portfolio. But because I'm much more overweight China than I used to be, and because China's weighting in the index is much higher because it's been outperforming, that means by a process of elimination, I have smaller positions in Southeast Asia.
Chris, I distinctly remember when we met in London in 2015, you had raised 2 concerns. PSU banks were in a big hole, and India's capex cycle has not started. Now, one problem is getting addressed, which is PSU banks have got recapitalized. So what does that do to your thought process for Indian banks?
Well, I remember that interview, so you're absolutely right. The one, I think the current government in India under Prime Minister Modi has made a lot of very fundamental, important reforms. The one missing link in the whole Indian top-down story has been the lack of action to recap the banking system. And the problems in the banking system, where problem assets probably getting near to close to 20% of total loans, are the key reason why the economy has been underperforming, why private sector investment has been in a continuing downtrend, and why bank loan growth has been running below nominal GDP. So all this has been apparent for some time. We finally had a meaningful recap announcement the other day. So that's the missing piece of the puzzle we've been looking for. And so the public sector banks had a violent rally. And so on a 2-year view, one would now hope that the recap happens, the NPLs are written off, and I would hope that by late 2018, early 2019, we start to see more evidence that the investment cycle's bottomed. So that, as I say, that's the thing we've been looking for in India. That's now happened. But obviously the government has wasted 3 years, because there's no reason why this bank recap couldn't have happened 3 months after the government was elected. So in that sense, 3 years has been wasted.
Chris, even though you are overweight on India, you don't have PSU banks or PSU financials in your model portfolio. After the bank recap, would you be tempted to look at them?
Well, no, yeah, I think Indian funds, if you're running an Indian fund, you should definitely have some public sector banks. Unfortunately for me, when I was last in India, which was, I think, in May, June period, I definitely came away with the impression that things were finally moving, or at least policy was finally moving to address the banking issue. So I did actually put SBI in the portfolio, but then I removed it because I was getting fed up of waiting 4 weeks before the announcement. But there's I think people who are lucky enough to own the public sector banks before the announcement should definitely continue to own them. A lot there was discounted in that one-day move. So one of the things I'm going to try and do this week is just to check out the situation on this and articulated policy. Obviously, we need to make sure that this policy is going to be followed through. So I've got no problem with owning public sector banks. But if you said to me you can only own private sector banks or public sector banks, I would rather own the private sector banks, the best private sector banks, who are likely to continue to take market share in terms of growing their market share of deposits.